very good way to make a judgment about the market's current state and future direction is just looking at the rallies compared to the drawdowns across different time frames. And right now, from a very broad point of view, we know that after the S&P just made another new all-time high, the rally from the low here is just about 19%. And you compare that to the previous downturn, which was 11%, and very simply put, the advance has been bigger than the decline. Very obvious, but important. Now, let's drill down a little bit further because along the way, there are smaller rallies as well. And so at first glance, again, much better here. But if you look in between what happened within the bigger moves, there were some pretty strong rally attempts, at least, along the way from July all the way down to the low here. And so between 5 and 4%, not too bad, of course, just over the course of a few weeks, but we know that they failed. Now, you compare that to the rallies that happened since then, and again, bigger at the very start of this, but really not too much bigger than what happened here. So just by looking at this in the vacuum, it doesn't look too different. Again, just looking at the smaller moves within, the bigger waves here. Now, the biggest difference, of course, is that the intermittent declines, right, in between those rallies were much bigger here. And also these drawdowns were bigger than the preceding advances compared to what's happened since, where there's really been nothing, right? The biggest drawdown, you can hardly see it here, is it's only about 2.5% at the beginning or at the end of last year to the beginning of this year. Whereas, you compare this to what's happened in between that, we can't really detect any sort of rolling over type move that could possibly persist. And so one of the things we have to look for is clearly this to change, right? At one point, the proceeding, over the next decline after potentially here could be bigger. And what that could do is then form another bearish pattern, which potentially then could be leveraged. Now, we don't think that's going to occur just yet. We, can't presume that, but that's what we'll be looking for. And so one of the things that plays into that as well is just looking at the 1% moves. And again, very simply put, you have 9 1% advances since the October low versus 1% decline. So no matter what we're looking at, a 9-to-1 advantage is just extreme, right? And that will need to at least change for something different to occur with this. And because without, 1% moves, what happens? The pullbacks are shallow and they're buyable dips, which of course traders have been willing to do so. And again, a change would be seeing one of these pullbacks bought again, but the next rally produces a lower high again. Continue to look for the same thing, but not jumping the gun in front of it because, this continues to occur where, the uptrend is persisting. And so if we do eventually get a pullback greater than what we've seen, these are 2 scenarios that we're looking at. Again, nothing to expect over the next 2 days or so, but, a pullback of 5% around the most recent high would get us down to right around that 4,600 area. Round number significance, clearly a support area, a former high back in the summer of last year and also in March of 2022. So again, with very, little support between that area, it would not surprise anyone that get this down 5%. But again, that will be double the amount of the biggest drawdown we've seen so far. And looking at this from a Fibonacci retracement perspective, a 38.2 retracement level would be around 43, 45. And that would be 11% pullback from the high. Again, pretty substantial. No one's talking about a pullback of that magnitude, but even if it does, it would still, be within the confines of a regular retracement within a longer term uptrend. So again, it's things to keep in our back of our mind as we go through the weeks and months ahead. And so up till now, though, bullish patterns continue to build and seeing breakouts. And again, we talked about how this potentially was a bearish pattern, didn't play out. But the slingshot higher and through new highs, we have a new target of 4920, not too far away right now because of how shallow or how slight this trading range was. And of course, all that still taking place above the breakout zone near 4600, which gave us a target of 5,030. Now remember, go back to this potential break or pullback scenario that's still right around that breakout zone, 4,600. So even if this happened, this would still be intact. If that's what we're looking at now, don't forget to check out these videos and subscribe. I'll talk to you next time. Thank you.